Good evening, folks. This is Andy Pedraza with Special Effects Academy. We're on the start of the week session in the Forex trading room for May 31st of 2020. We'll be going through our standard agenda. We'll take a look at the results of the prior week, our currency strength meter for the past week and the past month, any fundamental announcements on our calendar for the week coming up, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. With the ledgers on screen is the long-term exchange. We had a couple of trades close out, one profitable, one negative, net change minimal. We're in one trade right now, and AUDCAD long, waiting for a breakout past the top of the daily chart, which we'll see what that looks like when we get to the chart. So no significant change. Intermediate term ledger, we're slightly negative from where we were last week, but again, not a huge shift. Overall, it was a net flat week across the market, though we did have some very interesting intra-week movements, which show that the market may be ready for a bit of a wake-up. On the short-term account, we had a nicely profitable week to the tune of 6%. Again, there were some very interesting movements in intra-week, especially on the dollar pairs, and a few on the euro as well, and we capitalized on those for short-term trading. 3 trades open, really 2 of them were the big winners. The other one was a break-even trade closed out right before market end on Friday, but again, we had a nice bit of a recovery on the short term for the week. Notes and opportunities for improvement. As I mentioned already, some intra-week movements which are starting to present and which tells us to get ready for stuff that may be happening across the markets as the economies start reopening across the globe. There is fears of a second wave of infections, coronavirus infections, so we'll see how that pans out. But a lot of the economies, the countries around the planet are starting to open up one way or another. Some of them phase, like in the US, some of them going to a full activity and starting to count the fallout from the shutdown. There are going to be a lot of companies, especially smaller ones, that are not going to be coming back. This was pretty much the last nail in the coffin for a lot of businesses around the planet. Oil does continue to recover, and we'll look at that chart as well. And silver is at multi-year highs. As I'm saying, the coming months should provide opportunities we haven't seen in more than a decade as markets react with significant volatility. And once more, as I like to add on to this slide every week, we are looking at rescheduling our live event, which had to be postponed due to the coronavirus shutdown. We're looking for a rescheduling somewhere in mid to late fall, very likely in the September timeframe. And as soon as I have a firm date, of course, I will be communicating that. Now, let's take a look at our relative strength meter for the past 30 days and the past week. On the monthly, we can see that the clear winner has been silver, and I already mentioned that silver is at multi-year highs. The Australian dollar did pretty well, as did the Kiwi, so that side of the planet seems to be doing much better as regards an early recovery. The Canadian is also nicely bullish for the month, possibly or very probably on the back of improved oil prices. The Swiss, the Euro were pretty much middle of the pack. The pound was the big loser, followed by the yen, followed by the dollar. So in the 30-day view, those are the metrics. For the week that just ended, again, silver was a pretty strong mover. The Australian and the Kiwi continue to recover quite nicely. The euro had a very, very strong week. The rest of the yen, the dollar didn't fare too well. Everything else is pretty much middle of the pack. We do see more color on the weekly chart, as we can see that the dollar and the yen were pretty big movers, all things being considered. Fundamental announcements for the week coming up. It's a pretty busy week. We've got interest rate announcements coming out of 3 different countries or economies. And of course, we have our Super Friday, where we get the non-farm payroll out of the US and the Canadian employment numbers at the same time. So we will be trading the Reserve Bank of Australia's interest rate decision on Tuesday early morning, so really tomorrow night. We have the Bank of Canada's interest rate decision on Wednesday. We have the European Central Bank's interest rate decision on Thursday morning. And as mentioned, Super Jobs Friday from the US and from Canada. So those 5 will be live traded. With that, we move into the charts. I mentioned oil recovery. You can see it here in your screens. We see oil price coming out of the Kumar, of the Ichimoku cloud. So we have a very bearish recovery, a classic V formation where it crashed all the way to pretty much $1 per barrel, which is unheard of in modern times. And it's now all the way back to the mid 30s. It's still not where it was before the collapse started, in the 60s range, but certainly a lot closer than it was a month ago. Moving on to the currencies, euro dollar. Again, I mentioned that the euro staged a pretty impressive recovery, and this is on the back of a stimulus that the Eurozone added. For the first time, the Eurozone added stimulus across the board. Prior to this, it was up to each individual country to decide what they were going to do. So this is another unprecedented move among other unprecedented moves we've seen in the near past. So we've got a breakout of the euro against the dollar, doing quite nicely. And the market, of course, is already open as of about an hour ago. It gapped up significantly to the top side. So current price is above that red line where it ended on Friday. So we've got a nice little bit of a gap, and we are trading the euro well traded, our one winning trade right now, significantly winning trade on the intermediate term account. I'll be looking closely to how the market reacts in these first, I'm going to say 24 hours between now and tomorrow this time, to see whether we should start jumping into the euro in other trades. But for now, it's looking like a pretty nice bullish movement, getting close to a significant level of resistance at the 112. Pound dollar didn't move as much, but still moved up for the week. It is still not where it should be if it's going to do a bullish breakout, but it's certainly headed in that direction. So it's worth keeping an eye on, especially if the dollar continues weakening, which would be my natural expectation. But again, we'll have to see it start happening before we take any trades on this. NZDJPY had a relatively flat week. It did try to move into yen strength, dollar weakness on Friday, moved all the way down to a level not seen in about 2 or 3 weeks, but ultimately went back up to its trading range for the week. So net change 0, but it did have a very nice movement on Friday, which again tells us that there is significant downward pressure, but it's unrealized at this point. USD Canadian continues heading down. We traded this successfully. I forget on which account, but we did made some profit on this movement. And I would be looking for a further breakout towards the bottom to see if we're going to be taking more trades on this pair. It's looking very good, but again, I want to see it start moving before we jump in. USD Swiss, also a breakout of its wedge towards the bottom, and it is, or rather it ended the week at a very strong level of prior support. So we'll have to see how the week begins. But this is another pair that is showing some really, really good opportunities for a breakout. Aussie dollar, we're trading this one. We're trading it up, and so far that's been working very nicely. I think we're on the 5th or higher trade on this pair. And again, it is looking very good for continued movement towards the top. We're seeing not only Australian strength, which we saw in the relative strength meter, but we're also seeing dollar weakness. So combined, this one could be a very strong mover. Kiwi dollar, same thing. We're seeing the Kiwi strength. We're seeing dollar weakness. It had a very nice movement towards the top at the beginning of last week and then went sideways for the remainder. Tried to move in both directions, ultimately didn't, and just stayed at that midline. And it is at a strong level of prior support resistance. So another one we'll keep a close eye on for how it begins the week. We have an open trade somewhere or a pending order or something. So likely we'll get taken into that if we're not already in it. Aussie Canadian, I mentioned this at the top of the call. We're waiting for that breakout past the top of the daily chart, and everything is looking positive in that sense. We see Australian strength returning to the market, and it's pretty obvious on this Forex pair. And also, we're seeing still Canadian weakness because oil price, no matter if it's recovering, is still historically low right now. So there may be a good opportunity for this one to shoot up a couple of levels and establish a range. If we go out to look at the weekly, which I don't have in this presentation, we can see that there is a lot of room towards the top for this one to continue moving. The Euro Swiss did a breakout towards the top. And indeed, it tried to break out even further on Friday, ultimately failing and coming back down to support. This one may have opportunities to trade in either direction, depending which way it moves. It doesn't look like it's going to stay stagnant for long. So it had a very long period of little movement, and I think that's over. It's either going to continue up with a vengeance or return to the prior level of support, perhaps beyond. Either way, there's a good opportunity to make some profit off of it. Again, waiting to see which way it goes. Euro pound is still trying to head towards the top. So we have seen pound weakness as Brexit deadlines pop up on the calendar again. Obviously, Brexit is a done deal, but we're starting to get closer to the deadlines of when the UK actually cuts all ties. And with the pandemic on top of everything else, there is now a bit of heightened worry about what's going to be happening to the pound. So that explains that weakness partially. And the other side of it is euro strength, again, on the backs of that 2.4 trillion stimulus package that was approved last week. EURJPY also doing a breakout towards the top. This one is a little bit more puzzling to me. I don't think the yen should be weakening that much against the euro, but it is. And then we don't fight with whatever the market is doing. We just try to ride it. So at this point, I will be looking for opportunities to go long if the movement continues. And of course, if it doesn't, we'll be trying to trade it down. Either way, we'll be looking to make something off of this movement. Euro Canadian still trapped in a sideways range, one of the few that are not showing signs of breaking out yet. The Canadian had not a bad week, and then the euro, of course, showed strength. So this one was two currencies that really couldn't get a stranglehold on each other, on either one. So we're still in a sideways pattern and waiting for that breakout. Pound JPY also showing yen weakness, a little bit of pound strength. Not sure how long that's going to last, given what I just finished saying, the Brexit fears popping up again. So mainly this was the yen showing weakness for whatever reason. In this case, I am looking for a break towards the bottom that we can trade. Aussie JPY, Australian strength. I've mentioned that multiple times on this call already, and it's looking like the yen weakness is helping it move towards the top. We got taken into a pending order on the Aussie JPY late last week, trading it up. So we'll see if it does continue that movement and gives us something we can latch onto. For now, we are pretty flat on the trade, but it is looking like a confirmed breakout towards the top. Euro New Zealand, definitely a pair to trade either short term or very long term. So we did make profit on the short term account, and late in the week also we got taken into, I think, a longer term trade on this one, long term account. So we're looking for it to go back to prior levels of resistance around the 183 level, which is where it seems to have stopped the last 5 or so times it tried. So at this point, we're trading it as a channel bounce, and we'll see how that plays out. Pound Canadian didn't really move much net for the week. It had some pretty good intra-week movements, going first down, then all the way back up, then back to the starting point. So again, net change 0, but it is showing all the signs of a potential breakout in the very near future. In either direction, we really don't care which. But looking at the lay of the land, of course, with pound weakness and potential Canadian strength, I would be looking for opportunities to trade it down. And last but not least, our pound Swiss is still inside the wedge we drew a couple of weeks back, so we're waiting for it to break out in either direction. The Swiss hasn't seemed to have much luck in the past couple of weeks, and of course, the pound is now facing a little bit of trouble. So it's anybody's guess which way this is going to break out, but we will trade it in either direction if we see some good traction establishing itself. That's it for the chart. Setups in progress. We've had coronavirus on our radar for probably the past couple of months. I've added now to this slide a few of the other factors that are affecting these currencies. So, of course, the UK, everything is still coronavirus across the board, but the UK is also facing Brexit pressure. In the US, we have, of course, the collapsing economy caused by the shutdown, so it's still coronavirus related. But now we also have riots going on in major cities. There was, for those of you outside the US, we had a black person killed by the police for pretty much no good reason last week, and that has sparked riots in all major cities. And by riots, I mean businesses being vandalized and looted, fires being started, skirmishes with the police and fire departments, people being shot with rubber bullets or tear gas or whatever. So that is an ongoing situation, and obviously isn't helping in any form, at least not helping the economy. So not sure how that's going to translate as regards to US dollar, but it's definitely a factor to keep on the radar to see what's going to happen. Australia, I didn't add anything to that, but it is a economy that is at least not going down right now. It's actually showing signs of health and recovery. And we have to remember that the Australian economy has been in a tailspin for at least the past 2 years. So it is about time that it starts moving in the other direction. Japan also was showing some weakness in the past week, but in general, there's nothing much to say about Japan other than that they are slowly coming out of the coronavirus shutdown. Not that Japan really shut down. They had a minimal shutdown, but still, they're starting to come out of even that. And of course, on the euro, we have that stimulus, $2.4 trillion that I mentioned earlier in the session. So that's what we're looking at right now as the week begins. And final words here, and this is pretty much what I've been saying the whole time. It looks like we're at a tipping point where across the globe, we're coming out of this forced hibernation. We're likely going to enter a sort of economic Hunger Games where the market is going to evaluate every country's actions and reward or punish the respective currencies based on the usual for the market, which is pretty much emotion and lack of common sense. People that expect logic out of the market tend to fare very poorly when it comes to trading, because the market, especially short term, is never rational. It's all sentiment, emotion, and the like. And of course, then the talking heads on Bloomberg, CNBC, and the other financial channels will come out and retroactively explain why everything that happened was a given and it was obvious. And of course, that is, excuse my French, bullshit. If you look at one of my favorite authors, Nicholas Nassim Taleb, his first book is Fooled by Randomness, and it perfectly explains all this, in that people like to look behind 2020 vision, all that hindsight is 2020, and they try to explain everything away. This is obviously pointless, since by the time they explain it, it's already happened and you really can't take advantage of it. And of course, they never manage to explain it before the fact, only after everything's done. So make sure you don't get caught up in that sort of nonsense. And remember, you don't need to be right to be successful in the markets. You just need to make money off of it. Being wrong is okay as long as you're not trading your opinions. And that is going to be the end of the presentation for today, this part of the week. Do I have any comments or questions from anyone? Okay, then I thank you very much. I'll be sending out a recording of this presentation very shortly, and I'll see you guys throughout the week. Thank you very much. Have a rest of a great weekend.